Hey everyone, Chris Haddon, Jason Balin, co-founders of Hard Money Bankers. Please check us out at hardmoneybankers.com and Facebook/hardmoneybankers. Today we're talking about mastering both the homeowner and investor sides of real estate.
So listen up. If you're a real estate agent, a real estate investor, mortgage broker, pretty much anybody who deals with homeowner or investor real estate transactions, you need to listen and watch live right now.
Real estate investors would be very well served to be super familiar with what's going on the homeowner side of things, on the consumer side of things. Even though it's not 100% what they do day to day and what they think about all the time, it really affects them a lot.
Yeah, I mean, homeowner transactions or primary residence transactions really are 90 to 95% of all real estate deals to begin with. The investor community is such a small segment. I mean, that's the world that we live in and a lot of our clients and Sphere live in. And to us, it feels like there's so many investor transactions out there, but in hindsight, really there's just not. And it's okay, but you need to understand kind of the bigger picture primary residence real estate world related to the financing side in it, or the way that rules and regulations and laws are created so you can work accordingly. A few examples of that are financing and bank financing that obviously is very applicable because you're selling your property to a homeowner or a primary residence owner you're after you renovate it.
As an investor, in all likelihood, you're selling to a homeowner. Yeah,
and that homeowner is getting bank financing, primary residence financing.
And the FHA, the Fannie Mae, all the stuff that...
Exactly. So you're an investor, and it's your investor transaction, but you're still dealing with that homeowner, and you got to go by their... You hate to say, you kind of got to follow their rules or their guidelines if you want to sell it for top dollar. And some of those things are, this day and age, anything that had some sort of renovation piece or, a flip piece, they're requiring two appraisals. Not something to be too overly concerned about. It's just part of their guidelines, and you got to follow it.
Yeah, maybe deed restriction.
Yeah, deed restrictions that limits how quickly you can resell the property. There's a lot of things related to that, but we're all contingent on that world because there's a lot more transactions on that end. And on the flip side, when you purchase a property from maybe a bank or there's a short sale involved, but any consumer bank that is involved in that transaction, a lot of times they run you through hoops because they're not used to dealing with investors. They're trying to promote home ownership, even though this is a little bit different topic related to, a homeowner can't buy this property because it needs so much work. But they're not used to dealing with investors as much, and they are getting better on it, but they're just not used to it. They're used to dealing with homeowners. So it's just something to be aware of. It's not something that you need to be overly concerned about. It's just reality, and just make sure even if you feel like a primary residence or a bank or a residential real estate agent doesn't apply to you in your investing business, it does on some aspect.
Yeah, like you said, and the transactional aspect, like actually doing a deal and selling to a homeowner, the different things that come into play. But talk about the bigger picture a little bit, the more macro, like how consumers and their finance and everything else can affect investors on a large scale.
I mean, interest rates that are created for primary residence types of loans. These banks you need banks in this world, in the investing world. Even if you're not the one that's getting a direct loan from them, they exist. If you are the one getting a direct loan, like say it's a rental property and you need to use them for a refinance, you need to be aware of what their going rates are, what their terms are. Can they lend to you in an LLC that you bought a property in, or do you have to deed it back to a personal name in order to get a takeout loan? There's a lot of different things related to that. But more importantly, when you're flipping these properties, that's where the banks come in and they're dictating the interest rates, they're dictating the down payment requirements, all things that have to be aware of as a real estate investor.
Yeah, in other words, the interest rates of the consumer mortgage loans, the terms, how flexible it is, how easy it is to get money, is affecting your real estate market. It's affecting if you can sell for more than you thought or less than you thought.
That's right.
And that's why you need to keep your eye on what's going on in rates and everything else, because it affects the market as a whole.
That's right.
All right, let's switch to the other side for a second.
Yep.
Let's talk about retail residential agents and how they can benefit from paying attention to the investor world.
I feel like they can learn a lot from real estate investors, because real estate investors, they're in this for a profit. There's no there's no emotion attached to a property. The investment works or it doesn't work, right?
Right.
So there's just no emotional attachment.
It's a numbers game.
It's a numbers game. Take it for what it is. But a lot of these real estate investors are great at marketing, great at negotiation, great at performing on construction and improving an asset. If you want to know exactly what a property is worth, or what you think that market can bear for a resale, go look at investor transactions. If you have a homeowner that you want to list as a real estate agent, chances are, and they're living in that property now, and it could be nice, chances are you're basing your comps in order to list that property based off of some sort of real estate investor's flip transaction that they did. And I'm guessing that they probably did a better job, and that house is in better shape because it's fully renovated and brand new, as long as they knew what they were doing and they didn't do shoddy work, compared to the livable homeowner house right now.
Yeah, I mean, I would say that in most neighborhoods, the investor, be it like a bigger builder, doing ground up, or some people just gutting properties and getting them back on the market, whatever it may be, they're probably driving the sales in the neighborhood.
Yeah.
Like their product on that block is probably the top comp, meaning it's sold for the most amount of money. And paying attention to what those guys do, I don't mean a person who does 1 or 2 a year, but people who really are doing volume in that area, they know, in all likelihood, taking a look at their product is going to be important for you comping properties, and if you're getting into deals yourself, what have you. So even though 80, 90, 95% of your business is that retail homeowner world, you got to pay attention to those people too.
Yeah, and I feel like a lot of real estate agents, not that they try not to get along with investors, but investors kind of get a bad rap because, they're not using a real estate agent maybe on the front end,
right.
But they know their numbers. I mean, we can go back to this emotional thing. I mean, typically real estate investors are easy to deal with. And if you had a bad experience with an investor, it's one of two things. Number one, it could be that they just didn't know what the heck they were doing, so you're just spinning your wheels with somebody who's not qualified to do a deal to begin with. Or you probably got upset because the numbers were the numbers and they couldn't go against it. That $5,000 that you couldn't get the property that much cheaper for them broke the deal. They know what their numbers are. They know what their margins are. You can learn a lot. And and also as a real estate investor, real estate investors tend to know a lot more about a subdivision, a neighborhood, everything that goes into a real estate transaction than a homeowner does. They're buying dozens and dozens of properties a year. A homeowner is buying one every few years. So, another kind of little off topic related to residential agents, it behooves you to start working with investors as well and trying to find the right ones. I mean, we know a lot of real estate real estate agents who become very successful just by attacking that investor market and adding that into their kind of their world and their knowledge base.
Here's the big takeaway for today, guys. It's don't get trapped in your little bubble of real estate that you only know one area and one client type and one transaction type, because there's a lot of other cool stuff to learn from, to profit from in other areas of real estate. And it's funny because in our world, we see both sides. We see a lot of both. Like we have a lot of friends and retail agents and mortgage people, obviously a lot of investors in our world. We see both sides and they're very different. And there's, it's kind of funny, they operate in different ways, like retail agents being an agent for, a client. They are very professional in their dress and in their presentation and everything else. And then on the other side, investors who are the principals, the buyers themselves, they just kind of roll around, do whatever they want, like they're pickup trucks or like they're, they
don't really need to impress clients.
They don't need to impress the client.
It's a little bit different, and it's really important to be aware of the industry as a whole. And no matter what segment you are related to it, that's great. But just be aware of what exists. Imagine how much more you can get out of it if you're a real estate agent and you start picking the brains and start working with investors to see their side. And as a real estate investor, understanding what a real estate agent's looking at and understanding their point of view inside of real estate transaction. And if you're a mortgage broker or appraiser or anybody else in this in the real estate industry as well, understand that side as well. And for so long there's been homeowners and primary residence transactions and investor transactions, and they didn't really overlap that much until now. So make sure if you're so one-sided, kind of mold and mix together and master both sides of it. We feel it's extremely important to do so, and will help expand your real estate careers.
Awesome. Thanks, guys, for checking us out, and we will see you next time.
Thanks.